All right, good morning and welcome to the first Spectrum webinar in 2021. My name is Sophia. I curate learning events to bring together and build a community at Spectrum. So for those of you who are new to Spectrum, we are located at Duo Tower. So aside from curating learning events like this, we provide events and premium workspaces for you to work from, and also the network to expand your business. So today's webinar, it's great to see the number of signups. Fantastic. It's timely, I think, to hear on crypto's potential as the new financial system. So before I start introducing the speaker for today, let me try and do this poll. So everyone get on this poll and give me your answers. So what do you think? Will cryptocurrency be the new financial system? Okay, I'll give it a few more seconds. Wow, brilliant. Okay, there you have it. So Kenrick, majority says yes in 10 years time. So I leave it to you later to take this on. Fantastic. Okay, so let me introduce to you. I'm very excited to have with us today to also share more on the future of Bitcoin and DeFi, aside from us finding out whether crypto will be the new financial system, question mark, is Kenrick. He's the founding partner of Lunex Ventures. And Kenrick holds an MBA from Hong Kong University of Science and Technology. He has spent the past 15 years with tech startups in Southeast Asia. And Lunex Ventures is the blockchain and crypto fund by Golden Gate Ventures. So for today's agenda, what we're going to do is for the first part of the presentation is 40 to 45 minutes. And then after that, 10 to 15 minutes, we'll address your questions. So please post your questions for Kenrick onto the platform here. So without further ado, Kenrick, I'll hand it over to you for the presentation. Thank you.
Thank you, Sophia. Just sharing my screen here. Please let me know whether you can see it all right.
Yep, looks great.
Okay, cool. Thanks everyone for joining on this early breakfast meeting, which unfortunately has to be remote, but that's the way it is, unfortunately, this year. So super excited to speak to you about an introduction to Bitcoin and crypto finance. And one of the kind of key challenges we often have is in talking to kind of audiences is that there's a wide kind of range of knowledge and expertise. So some people who have gone down the proverbial rabbit hole, they're quite advanced, but then people who are just starting to look at it, maybe they need a bit more kind of general introduction. So today, we're keeping it pretty high level in terms of what we're talking about. So primarily we start with Bitcoin, and then we go into kind of crypto finance, what we call DeFi as well. So I'll do a general intro, like contrasted versus the internet, what blockchains add, why it's all about the money, what that non-sovereign money looks like, which is Bitcoin, and then the other money protocols that exist today, which we call proverbially DeFi. So let's get straight into it, and do feel free to ask any questions you have, put them in the chat, and so we'll answer them at the end of the session. Feel free to ask anything. There's no question silly enough, so please do that. So very quick about myself. I think Sophia already introed me. I have an MBA in finance, mostly worked at startups here in Singapore. Started with the rocket companies in 2011. Gaming startup, which got acquired by King, was with HomeAway, which got acquired by Expedia, and then joined Golden Gate, from where I launched Lunex. We started in this in 2017. And so what we do is invest in both equity investments, so early stage seed deals into crypto and blockchain companies, as well as the actual liquid cryptocurrency. So we have a portfolio of both. And fortunately, particularly because of the run kind of last year, we've done very well. We're up like 400% in 2.5 years. So super excited about that. Almost all of our startups are doing really, really well. And our thesis has always been to invest in this kind of infrastructure stack of what we think will be a new financial system. And that's kind of what we're seeing developing. So I think all of your answers of like, yes, it will be, but in 10 years, I think that's about right. This is not something that will happen overnight, but it's going to be a long process that is accelerating, but will take time to play out. So let's first kind of address what blockchain actually solves. It solves a double spend problem. So if you think about the internet itself, the internet was just information, right? Digital information exchange. So if I have an email, a PDF, an MP3, Bob can send it to Alice, but he also send it to Peter. They can send the same file. So it's information that spreads. Blockchain basically solves for the fact that you cannot send an asset to multiple people, or it's not an asset anymore. It's just information. So that's in a very basic nutshell what blockchains solve. They make digital ownership exclusive to a particular owner. In this case, it would be a private key owner. So if I have the private key to a certain asset, this could be Bitcoin, this could be a stablecoin, this could be an NFT, this could be anything, I'll be able to transact that specific asset to someone else, but then I don't have it anymore and I can't send it to two people at the same time either. So in a very simple nutshell, that's basically what blockchains do, the digitization of assets. So public key cryptography basically enables this to exist. And so we kind of seen a sea change before during the internet, and we tend to forget that sometimes. It's like how quickly our world changed, because even I'm a bit older, but I do remember a time when I went to the library when there was a Blockbuster or the equivalent in my hometown to rent videotapes, where you buy CDs. That is 20, 30 years ago, maybe maximum, and the world has completely changed. Like the FANG stocks did not exist, right? 25 years ago. Those are the biggest market cap companies today. And I do vividly remember in the 90s, there wasn't a lot of skepticism about the internet as well. Like, why do we need this? We have perfectly good newspapers. We have perfectly good telephone lines. Very much the same skepticism that you see today about Bitcoin in particular. But it's basically a hallmark of any revolutionary technology, is that you have superior technology plus, and this is a very key point, permissionless innovation. So anybody who wants to join this network, who wants to invent something, they can build on top of it. They don't need to ask anybody for permission. They just build whatever they want. So an internet was a good example of that. Google was started in a garage. Facebook was started in a dorm room. They didn't need to ask anybody for permission because the internet is an open protocol. People can just build on top of it. So this is same thing as happening again in public blockchains. But it looks very strange. It looks very weird in the beginning. So many people, myself included in the beginning, go in with a healthy skepticism, and it starts with denial, anger, bargaining, and eventually people get to acceptance. It's very interesting to see this journey because everybody goes through it. And again, myself included, I was not the first time that I saw it as like, oh, this is going to change the world. It takes a bit of time to understand, and you really have to kind of familiarize yourself with the concepts and the technology. So in my view, a similar shift is underway now, where traditional financial companies, your banks, your insurance companies, anything that is a middleman that deals with assets is at risk of being disintermediated, like completely, basically. Either through newer centralized parties. So banks, you could see people using exchanges like Gemini or Coinbase instead of a traditional bank that's still a centralized party. Or people could actually move to completely decentralized protocols, which is the DeFi things that I will touch upon, where there is no middleman. You're just interacting with code. You're just interacting with a blockchain. Nobody is there to hold assets for you because you are always in control of your own assets. You control the private key and you just interact with contracts, smart contracts, basically. So there is no middleman. It's complete disintermediation. And it's happening today already in a limited scale, of course. So first, in essence, what is a blockchain? In its simplest form, it's a distributed database. It's just a ledger entry, right? If you're familiar with Bitcoin, Bitcoin is basically just a ledger, but it's a distributed ledger. It's a ledger that is maintained on tens of thousands of computers, nodes as they are called, all around the world. I'm running one at home, for example, right? I have I think the total Bitcoin blockchain is 300 gigabytes. I host every single transaction that has ever happened on the chain here in my house on a Raspberry Pi, like very simple. And that's the power of it. Like this is through this decentralization, nobody can change the rules. Nobody can make transactions that are not supposed to happen. The decentralization is the power of it because so many people are checking the network. So there's key participants, nodes, what I mentioned, miners, people who get to add new ledgers, new entries to the ledger, developers who work on the protocol, and then there's actually users, right? So people who hold it, who send it, who use it for payments. So in the very essence, that's a blockchain. So it's an inefficient distributed database, but it is inefficient for a reason because you get other properties in return for that. So the censorship resistance and the immutability. You cannot have that in a centralized system. So a system of blockchains should have all these characteristics. This is from an educator in the space called Andreas Antonopoulos. They should be open, neutral, borderless, censorship resistant, immutable, and permissionless. If a blockchain does not have these characteristics, it's not a blockchain. So you often see people coming with, oh, we have this new protocol blockchain which does 1 million transactions a second. It's probably not blockchain, it's probably a centrally hosted database. So it's a very, kind of gray area sometimes to understand what it is exactly, but it should have these characteristics in order to qualify as a blockchain and have the characteristics to give people the confidence to build their applications on top of it. So what is the biggest asset that humans use that relies totally on consensus and shared beliefs? It's money, of course, right? Like this is why most of us get up in the morning and go to work, but we don't really think about what money actually is. And I think it's becoming more and more evident. I don't know if any of you guys have been trading GameStop yesterday, but I think it's more and more obvious that our current system of money is broken, right? So the purchasing power of your US dollar, the only certainty is that it will go down consistently over time. So money in the bank will just lose value. And that is, of course, because of inflation targeting by central banks. This is a popular meme in the crypto industry, money printer go burr. There is no end to it. Let's not go into all of the macro kind of things behind it. I think all of you guys are very well aware of that. So along comes something that proposes a whole new system of money. And it's not like our current system of money is something that we've been using for hundreds of years. No, not at all, actually. Like we started out with, as humans, with stones, and then we moved to gold. And only in 1971, when Nixon went off the gold standard, we moved to a completely trust-based, faith-based fiat standard. So that's only like 50 years old, right? It's a very new invention, and there is no discipline on money anymore. It's a bunch of people just in charge of how much money should there be. And our money is a debt-based system. It's not an asset-based system. So money has evolved over time, and it's just a return to the mean of an actual asset that is money, and it's not a debt obligation that is guaranteed by the government, basically. So when you think about it very rationally, what money is, these are some of the traits that good money should have. And whether people like this or not, fiat is not a great money system. It just, all these characteristics, it doesn't score very highly. Like Bitcoin is a much better version of that. The thing where Bitcoin lacks, it's acceptability, of course, like it's not accepted everywhere. It's stability. It doesn't have a long history. It's only 12 years old. But it has all these interesting other characteristics. It's much more divisible. It's limited, and it's much more scarce. It's fungible. It's verifiable. It's openly programmable. It's censorship resistant. Even gold doesn't have any of these properties. I cannot program gold. Gold is very much censorship not resistant. If the government issues a decree, they can seize your gold and it's gone, right? So you can't do that with Bitcoin. So very objectively, no matter what you think of it, just comparing the characteristics, Bitcoin is a better money. So that's something that people often kind of forget, but it's quite an important one. And then the question often comes, so even if Bitcoin is better money, why will it win versus other cryptocurrencies, right? This is a very common beginner question, and there's a number of reasons for that. First, the way that it started absolutely fair. The way that Satoshi launched the network, there was no sale. It's definitely not a security. It's classified as a commodity in the US. It's by far the most secure. Like if you look at the hash rate, the computing power, protecting the network, it's orders of magnitude higher than any other chain. So it's way more secure. It has the largest network effect. People say, yeah, what if it's MySpace to Facebook, right? Very unlikely at this point. We have 100 million, estimated 100 million Bitcoin users globally. Very unlikely that somebody will come in and replace that. It's actually decentralized versus some of the other chains. As I mentioned, lots of people are running nodes. And money is a winner takes most market. So money will naturally gravitate to the best store of value, to what most people agree on is a good form of money. And the reason that stocks are so high and houses are so expensive is they catch a monetary premium, right? Nobody wants to store their wealth in cash in the bank because that just loses value over time. So they store it in other things that the government cannot print. Stocks is a good example of that, but obviously stocks can be printed by corporations. Houses is another one. What if we had a money that's actually not inflatable, that is actually limited in supply? This would be kind of the store of value for anybody who understands it, and would basically suck in all the monetary premiums from all the other asset classes that exist around the world. This hasn't happened yet, of course, because we're still really, really early in this development, but this is something that we could trend towards. And I think even today, the Bank of Singapore released a note where their chief economist said that Bitcoin could overtake gold at some point, which is an interesting change of tone from them versus a few years ago. So this is kind of the journey that a lot of people go through. Like you start with like, this is bullshit, it never worked. Central banks will ban it. It's only used by criminals, which it is not. A very small percentage of uses for criminal activities, because every single transaction is public forever. You'd be a fool to use it for anything nefarious, basically. You're much better off using cash for that. Then people move to the blockchain is interesting, but not Bitcoin stage. Eventually they'll end up at a stage where I've arrived at, where I'm like, oh, why would I ever hold any fiat currency? I'll just store whatever I don't need for the moment. I'll just store it in Bitcoin. And if I need to buy something, I'll sell a little bit of it to buy whatever I need. That's kind of my standard modus operandi. And I don't need to use the banking system. Like I've basically stopped using the banking system completely. So it's a journey that people go through. And obviously we're really, really early here, and I'm not expecting anybody to do what I do for the moment. But I think I've seen a lot of people move along this journey, and I've never seen anybody move back along this path. Like they always go forward, but they never go back. Maybe they get stuck, but they never go back. So who's adopting this new ecosystem? And this is quite interesting because most people that we interact with on a daily basis, myself included, are not the target audience for this. We often interact with some older people or people who are very affluent or well off, particularly in Singapore, right? And this is not really the target audience for Bitcoin. It's mostly young people and emerging markets which are adopting this technology at a rapid pace. So if you look at the top holdings in, I think it's called IRA accounts in the US, millennials, they have Bitcoin there right behind, even though there's not an ETF yet, they pay a premium for the Grayscale Bitcoin Trust. They are adding it to their portfolio, and within the Gen X and the baby boomers, it's nowhere to be found. It's a big generational split. Same thing for who's taking this up in emerging markets versus developed markets. If you see the trading volume here, this is local Bitcoins. This is a peer-to-peer exchange, where in developed markets, basically the trading volume trends in line with the price development, so it's used for speculative purposes. Whereas in emerging markets, people are actually using it and adopting it to escape their local currencies. Argentina, Venezuela are kind of examples of that. And they actually use it for different purposes rather than just speculation. So you actually see the uptake in those markets. So it's kind of blindsiding a lot of us that are living in our relative bubbles, of which I'm part of as well, of course. So still a tiny market cap. Actually, I have to update it. Like I used some slides from last year when it was like 300 billion, but now we almost hit 1 trillion, I think, in terms of total market cap. So Bitcoin and all cryptocurrencies now have, I think, overtaken. Actually, I haven't updated Amazon or Apple either. Those are probably a lot higher too, but you get the point. It's still a tiny asset class compared to just total M1, M2, total gold market cap, and against all stock markets. It's still tiny, tiny, tiny. So we're really early on in this development yet. If you benchmark it against fiat currencies globally, Bitcoin, again, I had to update this yesterday. Last year, Bitcoin was number 30. Now it's number 16 in terms of total market cap, right behind the Russian ruble. So slowly moving up the ladder. I think we still have some way to go. What do we have here? 20, 30x until we reach US dollar kind of market cap levels. So that gives you a sense of like we're still quite early. Just some high-level stats also to give you a sense of where we are. This is actually pictures that I took in Singapore, Bitcoin ATM at Raffles Place. There's one at Clark Quay. Crypto ATM installations are just growing exponentially globally now. And that should be an indication that people are actually using this technology, right? Like people wouldn't install ATMs if nobody is using it. Bitcoin now is doing more. This data is again a little bit outdated, but it's just to show the point. Bitcoin is doing more volume than PayPal does in an entire year, and that's probably one of the reasons why PayPal added crypto as an option not too long ago. So big players are starting to take notice as well. So Fidelity is doing crypto custody for a while. There's regulated futures on the CME. PayPal launched. There's just a real host, particularly last year, of institutional services that have come online, where you see hedge funds, the likes of Paul Tudor Jones, a number of other ones who are just entering the industry and taking big Bitcoin positions. I don't know if you're familiar, but there's a company in the US called MicroStrategy, which is a relatively small but publicly traded SaaS company doing enterprise SaaS. Their CEO fell down the Bitcoin rabbit hole, used his entire treasury to buy Bitcoin to the tune of $400 million, then issued a convertible debt obligation of $600 million and bought Bitcoin with that as well. So he bought over $1 billion worth of Bitcoin for his balance sheet. The price has since doubled, so now he has 2 billion of Bitcoin on his balance sheet, and his stock went up 5x. So a lot of other CEOs have kind of noticed this and are starting to replicate this. Like almost on a weekly basis, you now see corporations who are adding this as a treasury reserve, because it's just better to hold long-term than just cash, because cash disappears. This has a 12-year history of just appreciation. So now the battle is on, basically. This will be the interesting battle of the next 10 years. It's going to be state versus corporate versus private currencies. So state will be your central bank digital currencies. China is probably the furthest along with that when the digital yuan will be launched. I think the ECB is looking at it. Not sure what's going to happen in the US, but it's going to be very interesting. So it will be central bank digital currency, corporate digital currencies like Libra, announced by Facebook. We'll see how that goes. It's very easy to shut down by governments, as we've seen. And then there's private money like Bitcoin. So we're entering the age of money competition, which I think overall is a great thing to keep everybody more honest, transparent, and may the best money win, I would say. So this is a funny one also. In 2017, when DBS said Bitcoin is a Ponzi scheme, and in 2020, they launched their own crypto exchange. I find this very entertaining personally. And they recently sent out a digital currency report to their high net worth individuals. So they're also getting on board. So that was high level kind of Bitcoin and money. Let's talk about what else is there, right? So Bitcoin is, we can think of it as non-sovereign money. What is this? What are these money protocols and DeFi? And for the sake of keeping this presentation relatively short, we'll talk about Ethereum, where most of this activity is happening. So Ethereum is the second largest blockchain. It's a proof of work chain now. It's moving to proof of stake. We can go into the details of that, but not so important for now. It's basically, to think about it, it's an all-purpose platform for other tokens. So a lot of tokens that transfer on top of Ethereum are stablecoins, for example, USD stablecoins, or any other asset, anything as a token you can issue there. And it's a more flexible platform by design, so you can program on top of it. So this is where a lot of people are building applications. And as you can see from the total addresses, it's growing very, very quickly as well. So public blockchains are already a massive payment system, and basically 2019, 2020 in particular, we've seen the rise of stablecoins. So a lot of USD stablecoins are now being transacted on these networks. Whereas before it was just Bitcoin and Ethereum being the native asset on the Ethereum blockchain. Now it's a lot of stablecoins. So here you see the total stablecoin supply, and we're like around 35 billion, 40 billion of total stablecoins on public blockchains right now. The major one being USDT, Tether, which is in itself a controversial coin. Then the second one is USDC, which is a stablecoin issued by Circle in the US. That's a fully regulated US dollar stablecoin, fully one-to-one backed with US dollars in the bank. So more and more people are using this for payments. We are using it more and more for investments, like making a wire transfer is a lot of hassle, but if I can just send somebody USDC over Ethereum, great. Much easier for me. It takes me 5 seconds to do. And no hassle there. So a lot of people are starting to adopt this. So what can you do then specifically on Ethereum that is becoming so interesting? So here's an example of a DeFi application. Basically, DeFi is a permissionless financial system built on top of open blockchains. So permissionless, I don't need a central party. I control my own assets and I just interact with contracts. Like I don't interact with any humans. There's no recourse. It is what it is. Like the rules are the same for everybody. And here's an example of a lending protocol called Aave. They have, I think this is, so they have 800 million locked in their contracts right now. The way that it works is basically I can post collateral to this protocol, whether that's USDC or Ethereum or any other asset. So if I have a tokenized stock, I can, they don't have that yet, but that's something that would come down the line. I can post it here. The protocol recognizes the worth of this asset, and then I can take a loan against that, right? So here you can see if I deposit USDC into Aave, I will get 7.5% interest on that. And if I want to borrow some Aave, some USDC from the protocol, I need to pay 8.5% interest for it. So the spread here is 1%. Where does that go? That goes to the Aave token holders who kind of govern the protocol, if you like. So that's in a very brief nutshell how it works. And this is growing exponentially. Like these things are just taking off. This is the total value locked in DeFi. So Aave is just one of the examples of these lending protocols. There are other ones like Compound. And yeah, we have, what do we have now? 27 billion in total value locked in this protocol. It's great. You can just use it. It works. There's no hassle. Anybody in the world can connect into it and start earning interest today or just borrowing assets. One big other use case, breakaway product, I would call it, is decentralized exchanges. And I think this is a very interesting application that will feed itself into traditional finance or will eat away at traditional finance. So a decentralized exchange is basically, again, you just interact with a contract. And I have an example right after this slide. So there's no centralized party anymore to take deposit to take custody of your assets. So I don't send my assets anywhere. My assets just sit in my wallet. The minute I want to make a trade, I interact with the contract. It tells me how much I get, and it swaps it directly, basically, from the contract back into my wallet. So there's nobody there to be able to take my money, to change things. It just works. And I think, don't take my word for it, but just look at the volumes month over month. They were tiny a year ago, and now they're, what are we doing? $40 billion total DEX volume on chain. And this is on Ethereum. So here's an example of how this works. So in the top right with the little fox, that's a wallet that sits directly in my browser, which is called MetaMask. And a wallet basically is a set of keys. So private keys are stored in this wallet, which have access to the assets that are within this wallet. In this case, I have 4.4 Ethereum in my wallet. And here I'm on a website called Uniswap, which is a decentralized exchange. So all I need to do here is, if I want to change my Ethereum for USD, I just put in the amount that I want to change. I would hit swap, and it automatically swaps it from Ether to USDC in my wallet, and I'm done within like 30 seconds. That's kind of the power of DeFi. So these are early kind of use case applications of this. So this kind of, you're already starting to see this in the crypto world. This is eating into the volumes of centralized exchanges. So centralized exchanges that are large, regulated, do fiat on and off ramps, those have a very big use case still, like so your Coinbase, Gemini, Binance. But the smaller exchanges that are just doing crypto to crypto trading, they're starting to suffer from people just using decentralized exchanges. So very interesting development. The other, like another interesting one is this one, which could come into the FX market. This is called Curve. They use a slightly different bonding curve, hence the name, for swaps. And there's liquidity pools behind all of this, where you can, as a liquidity provider, you can deposit your assets and you get part of the swap fees and whole system behind it. I don't have time to go into too much detail right now. But basically the idea here is that any tokens that are relatively stable, so the different USD stable coins, or even currencies, you could think of currencies in the future that are not moving by 50% in a day. You could start to have swaps of these that are close to being free. So there's still a small transaction fee for the liquidity providers, but the way that these things are designed is that if you do an FX transaction, basically there's virtually no fee attached to this. And so in my view, it's just a matter of time before fintech companies start plugging into these protocols and offering these services within their apps, right? Why would I execute a swap or an FX transaction with a traditional broker and pay whatever those fees attached to it if I can just execute it on chain for virtually no fees? It just makes economic sense. So eventually, and again, not yet, this will take a number of years. We need more scalability and more reliability and all these kind of things, but this is kind of where things will go, where front-facing user interfaces plug straight into these DeFi protocols, and you can take out a loan, you can deposit your assets, you can swap things, super easy. This will be kind of the bank accounts of the future of people who are aggregating these protocols into an easy to use kind of application. So thinking of financial services, I think they'll develop on a spectrum. You're already starting to see that. So on the one hand, you have fully regulated, which is basically the ones that we've always known. That is your banks, your traditional financial institutions, basically what we call legacy finance. They're centralized companies, right? So those will exist, and those will exist for a very long time. But where all of the growth is going to be is somewhat in the quasi-permissioned ones. So these are people that are doing jurisdictional arbitrage. They move their exchange overseas. They maybe a little bit less on the KYC, partially decentralized. But the big growth area will be completely permissionless finance. So the one that we just saw, where it's decentralized, non-custodial. So there is no central party to regulate, to go after, to steal my money, because it is just under my control at all times. This will be DeFi, and all of them have pros and cons and will serve different market segments. If you think about growth, though, it's going to be the permissionless side, which is going to grow a lot, and the traditional side, which is slowly going to decline over time. Very much like you've seen the internet, where internet communication has just exploded exponentially ever since the 90s, and phone companies are still around. It just has been a gradual decline for them, right? So I think we'll see something similar in this space. And if you're interested in this topic, I'd recommend to read this article, basically making the argument any fintech today that's still building on legacy finance is not going to survive for very long. And this includes companies like Revolut, right? This includes PayPal. If they don't make the switch to blockchain-based infrastructure, they will also die. So that's why you see some of them actually starting to make this effort. But I do think in the long term, it will be crypto native companies that are taking over, but that remains to be seen. It's a playing field for everybody. So let's see what happens. But yeah, high level, I think this is where things are moving. It's super, super exciting. It's moving really quickly. The explosion of innovation and talent that we are seeing coming into this industry is absolutely phenomenal. It's people leaving traditional tech. It's people leaving traditional finance to build companies in this ecosystem, and the things that you are able to do, like it's amazing, and it's growing ever faster. So if you haven't tried it yet, just give it a try. Install MetaMask in your browser, get a little bit of Ethereum, interact with these protocols. And this is the thing, like really to understand the true power and to learn about it is to just use it in real time. That's the only way to really familiarize yourself with it, and then I think you'll get it. You'll get a good sense of what's happening. So yeah, thanks very much. That's the presentation I have for you today.
Thank you, Kenrick. Do you want to stop sharing screen for now? Great, thank you. So coming back to your question, if you haven't tried, so let us see how many of us own crypto. So Kenrick, interesting results here. We see majority on here, 60% say they do not own crypto.
Interesting. Okay, so see, we're still very early
Yeah.
in this space, so that makes me more confident to buy even more.
Great. Okay, so fantastic. We've got a couple of questions here. Right, so let me go to the first question from DC Chang. Thanks, DC, for your question. Do you see volatility as a problem to adopting Bitcoin or any cryptocurrency as a form of currency or transaction? For example, if I price an item to sell at 0.01 Bitcoin, the next day Bitcoin could be up or down 10%. How do you think this problem can be resolved?
Yeah, absolutely. And that was part of the characteristics of money, right? So yes, absolutely. Like for now, it's not a unit of account. Like it's too early and too volatile for that. And yes, it's any asset that's going through a monetization stage is going to be volatile, right? You cannot expect a new technology to launch and then just immediately go up and then be stable. That's not how it works. So yes, it's not a great unit of account for now, and it will be like that for a while, but it is already a good medium of exchange. I can send it all around the world without asking anybody for permission. That was not possible before. And it's an exceptional store of value over longer times, right? Maybe not from today to tomorrow, maybe not from this year to the next year, but over the past 12 years, it's grown at, I think, an average of 200% a year. It's just network effects that come into play. And if you take a longer term horizon, that should just continue to play out. So yeah, right now is obviously not a good unit of account, but I think that will change over time and the volatility will dampen over time. I think we're already starting to see that with larger institutions entering the space. There's just more liquidity on the order books, drawdowns, like still last year, there could be a drawdown of like 40% in a day, right? Still possible today, but it's becoming less and less likely, like over time, as there's more participants. It's just a maturing market. So yeah, it's going to remain volatile for a while. But that's your alpha, right? Like it's not going to just immediately monetize to its true potential. That's part of the of the thing.
Right, thank you. So that also answers, Karen, your first question on the volatility as well. So Karen, thanks for your second question. Would you consider cryptocurrency to be a long-term investment to hold or currency to spend or send payments across?
It depends on who you speak to, right? I think it's particularly Bitcoin is a different value proposition for different people. So to me and to you, it might be more of a longer term investment. Like to me, it's the best store of value. To me, it's the best money that I can hold to preserve my purchasing power into the future. I think we're still really early on in the development stage. Again, it's 100 million people globally who own it. I think that will be 1 billion in 2 years' time. So to me, it's a good investment right now for the longer term. But for other people, they might have other motives for it, right? So we saw the people in emerging markets who use it to transact freely, who are censored, who are not able to take money out of their country. It's something different for everyone else. And maybe small payments I already make with it, right? Small online payments. I don't care, like I just make a payment online. So it's something different for different people. And that's part of the value of it, I think, that it's not just one thing. It's many things to many people. So yeah, that's what it is to me, but maybe to you, it's something different.
Thank you. I think we've got interesting questions down here, Kenrick. So next from Vanessa, thanks for your question. Crypto is known for its decentralization in Singapore's particularly stringent regulatory environment. How do you see Singapore's regulators responding to balance permissions, regulations against these key trait of cryptocurrency?
Yeah, that's a very good question. Singapore has been very kind of forward thinking, I think, very open-minded about this. And I think you have to take this back to, we can learn some lessons here from the 90s, actually. And that lesson is basically an amazing technology with momentum at the right time cannot be stopped. And music sharing is an example of this. So in the 90s, we started with Napster, right? And Napster was like, oh, this is great. Everybody's using Napster. Well, I got all my music here on my computer. And then the regulators were like, oh, that's cool. But yeah, you're not allowed to do that. That's copyright infringement. So we shut down Napster. And then all kinds of copycats showed up and they got shut down. And eventually it pushed the technology towards BitTorrent, which is a peer-to-peer technology. And now that's still live today. Like you don't hear much about it anymore, but it's being used every single day. Technology was pushed by the regulators to the edge where the technology morphed into something that could not be banned anymore. It's just not possible to ban BitTorrent, right? Unless you shut down the entire internet. Bitcoin took lessons from that. And it's like, we start out with this decentralization principle from day one. So I do think regulators are recognizing that already. I don't think in the long term, they'll be able to stop it. It's just so powerful as a technology, like they can't stop it. So there will be regulations, which is good, of course, right? Like we don't want an absolute Wild West. So Singapore has been pretty forward thinking in this regard. It remains to be seen, like everywhere globally, we're still really early. A lot of regulators do not understand it properly yet. And I think the jury is still out. I think Singapore is in a really good spot. There's a lot of funds here. There's a lot of talent here, a lot of companies that have developed here. So I do think Singapore can play a leading role, but obviously it will matter a lot what the US does, right? Like the US is kind of the global financial regulator. They seem to be trending in the right direction as well, but the jury is still out. But long term, like, this technology cannot be stopped. It's just a question of like, how is it going to be integrated and regulated? Yeah.
Which also brings me to this question that I have. So with the digital banking license being issued, and they're supposed to commence in 2022. So do you foresee that the digital banks will launch cryptocurrency?
I've watched this whole development with great entertainment value to me, because I do think the digital banks are. I'm trying to find a nicer word for joke. Great, like, let them build digital banks, but I don't think, unless they build a digital bank that is based on these protocols, those digital banks will be relatively meaningless in the future. So yeah, I mean, great that they paid so much for their licenses, but I won't be using it, and none of the people that I know in my industry will be using it, and more people are joining DeFi protocols. So again, it comes down to this this article I had at the end. If you build on legacy tech, you will be disintermediated. But if some of these digital banks take a view of like, we plug in directly to this new ecosystem and offer Bitcoin, offer DeFi services, then yes, I think they have a great opportunity to take that market. I just don't think they will for now. Like, we're that early. But let's see. Who knows? Maybe some will, right?
Yeah, it'd be interesting to visit that. Where it's launched. Okay, any opinion on Ripple and the lawsuits, as asked by Karen?
I think, I mean, Ripple is it's probably a security, right? It's being issued by a central company. They've been dumping this token on the market for many years. So yeah, I do think it's close to again, scam is a big word, but it's I guess it's a good thing if it goes away. It has nothing to do with the open permissionless spirit of what crypto is and what it's supposed to be. So if they want to offer like a settlement system to banks through their Ripple net, that's great. But then they should just offer that. They shouldn't be having their XRP currency that trades as if it's a cryptocurrency, which it's not, right? It's a centrally issued, semi-controlled token. So it will probably go away. If I were a judge, I would say it's a security. So that's why some of the exchanges are already starting to delist it. Yeah.
Right. So we are still in good time. So audience, if you have questions as well, please keep them coming in. So next question, Craig, thanks for your questions. So has the risk of node attack gone?
The risk of what, sorry?
Node, N-O-D-E, attack.
Oh, node attack. No, yeah, we're not getting too technical here. Like, I'm also not massively technical. There's different attack surfaces for different cryptocurrencies, right? And I think Bitcoin itself is the most resilient, again, because it's so distributed. But there are attack surfaces that obviously are being addressed. So I think last year we had something, some kind of node attack surface where malicious nodes could circle good nodes and then like change transactions and these kind of things. I think the proof is in the pudding that the network has been operating flawlessly, almost with 100% uptime for 12 years. That these things are not a major concern. It's a bit of Lindy effect. Like, the longer something exists, the more resilient and trustworthy it becomes. So there is, in my view, and this is highly speculative and controversial as well, like, these nodes, to what degree do they need to be decentralized, right? So Ethereum, there's a lot of haters on Ethereum and there's a lot of lovers of Ethereum. I'm on the fence still. Like, these node operators, are they at some point in the future at risk from regulators of being shut down, right? A lot of it runs on AWS. We just saw what happened to some websites in the US with people being banned off of AWS. But I think Ethereum is okay. You can still run it on a home computer you can run your own node at home. So that's really important that you maintain that level of decentralization, that there's no attack vector through centralization, because that kind of mitigates your whole. Ripple is a good example, right? Like there's an attack vector here of a centralized company. Maybe they don't run all the nodes, but they definitely have a lot of say in it. And you take it down and the network goes down. So it's really important that these things are decentralized. So different networks have different attack vectors. Some of these the nodes, I think Bitcoin is again the most resilient because it's the most conservative. So I'm not worried about it, but yeah, of course, it is still early stage technology, right? Like there's always things that could go wrong. I'm very confident in it, but yeah, you have to make up your own mind. Yeah.
Cool. All right. So Craig has another question. What will happen to all the miners and the hardware of Bitcoin once the 20 million of tokens is fully issued?
Yeah. That's also a very good question. And there's a lot of discussion about that, right? Basically, the way that the protocol is designed, like right now, there's a halving every 4 years. So every 4 years, so basically every time a block is mined, which is on average every 10 minutes, a block reward is given to the miner. Which there's a block subsidy, which is a newly issued Bitcoin. Currently, I think it's 6.5 new Bitcoins per block that are being 6.25 Bitcoin per block that are being issued. And that's an emission curve that's been preset in the protocol. And in 2140, 2140, I believe, there'll be no more new Bitcoins issued every block. So what happens then, the miners will rely purely on the transaction fees. So right now, the block rewards consist of the block subsidy, which is that 6.25 Bitcoin every block that's being created and paid out to the miners, plus the fees that the miners get from the transaction fee. So if I send a Bitcoin transaction, I need to pay a small transaction fee. So block subsidy plus transaction fees, that's the reward that the miners get. Once all the subsidy is gone, the miners will have to rely completely on the transaction fees. And there is a lot of debate around that, whether those transaction fees will be enough or whether it will be enough to secure the network. People in Ethereum will say, no, it won't work. That's why we need to have inflation forever. People in Bitcoin say, no, we don't need it. So we keep the block sizes small. So there's competition for block space. So the fees will be enough to compensate the miners. That's a very interesting discussion. I don't know. We'll see how this ends. I think it will be fine. Again, blocks are 1 megabyte limited in Bitcoin. So there is a lot of competition for that block space. So the block space is highly valuable. So there will be enough transaction fees, I think, to pay for the security of the network. But again, we'll have to see how it develops. Nothing is guaranteed. Yeah.
Right, which leaves us to 2 questions by Lou. Lou, thank you for your questions. So I'll take the second one first. Given Ethereum is created and operated by a company, does that still qualify as decentralized? So does other alternate coins?
So Ethereum is not operated by a single company anymore. There's the Ethereum Foundation, but it's not like it's centrally controlled by a single company. So yeah, they did, and this is the debate that's been going on, right? So they did do a token sale very early on. So you could have argued maybe that it was a security in the beginning when they issued it, but I think even the SEC has, or people at the SEC have commented that Ethereum is kind of sufficiently decentralized right now that it's not a security anymore, but I don't think there's been any official statements on that, but that's kind of the general assumption in the market. So there's not a single party, I'd say, that controls Ethereum. It's the developers, it's the miners, it's the users together that kind of control it. But the strictest letter of the law, maybe it was a security in the beginning when they issued it, yes, but I don't think it is anymore. So yeah, I'm not a lawyer to comment too much on that, but it's an interesting question for sure.
Great. Okay, we have 3 questions before we wrap up. So another question by Lou. What are the scenarios that you think Bitcoin will fail?
Yeah, I try to think about that quite a lot because a lot of my net worth is stored in it. And I'm having a hard time actually finding something that will make it fail, like really, really fail. I think there are scenarios that can hold it back, can push it down, but really catastrophic failure, I don't see that much as a threat. There's a couple of them, right? Like there's quantum computing. Like people will say, like, what if there's quantum computing that can break the public key cryptography of Bitcoin? Yeah, that is a possibility, but there's also quantum resistant algorithms that you could swap out in the code, and then it works again. And if we have a quantum computing that breaks public key cryptography, we have a big problem globally with everything, including traditional banking. So at least there will always be a copy of the Bitcoin ledger that you could restart then from scratch with a new algorithm in it. So possible, but unlikely. In my view, could be an attack vector. So that's one. The other one that could hold it back, I think, is overly enthusiastic regulators that really push it down through taxation, really don't allow companies to use it. I think that was much more of a risk a number of years ago. I think that risk is kind of going away because regulators are starting to recognize that this technology is much more beneficial on balance than it is harmful. Again, it would not eradicate it, but it could hold it back. It could hold back the price. It could hold back the adoption by a number of years. So I think those are some catastrophic bugs in the code. Possible, absolutely possible still. But particularly Bitcoin is quite an ossified protocol already. It's very well reviewed. It's been working for a long time. The chances of it really catastrophically failing are just going down by the day, but they're not zero, right? So possible, but I don't see major kind of obvious threats that would say like this would make Bitcoin fail. So that's why I'm so confident in it and put my money where my mouth is, basically. Yeah.
But we saw a lot of cash grabbers coming in and artificially inflating the value and price of cryptocurrency and businesses in general, making it very unstable place. Cash grabbers that are in for a quick flip are inevitable. Do you think the next wave of cash grabbers is coming soon from an anonymous attendee?
Yeah, I mean, crypto in particular has gone through these cycles, right? And these 4-year cycles, they've been focused around the halving, where the block subsidy gets cut in half, and then you get a mania like we saw in 2017, and then everybody loses faith again, and now we're kind of moving up back into a new mania. I think it's inevitable. I don't think it's the fault of these assets. It's human nature, how we behave as it's kind of herd behavior. I mean, look at what happened to GameStop yesterday, right? There was jokes going around on Twitter. It's like crypto people looking at the stock market and like, this thing is too volatile. Like, why would I invest in stocks? So it's human behavior. It will continue to play out like this over time. Again, like I do think crypto in general, the volatility will dampen. So in 2018, we had like an 80% drawdown on the Bitcoin price. There will be big drawdowns again at some point, but maybe this time it will only be 50%, right? For example. And I think there's been studies on like volatility that Bitcoin is actually not that volatile anymore. I mean, it still has that reputation, but if you compare it to certain stocks, even large cap stocks, these large cap stocks are more volatile than Bitcoin. So yeah, human behavior, you're not going to eradicate that. But I think over time, the market will solve that problem. Yeah.
Right. So we'll have this final question by Vanessa. Very relevant question as well. I like it. With the high energy resources required for crypto mining and transactions, what are your thoughts on the environmental impact of cryptocurrency?
Yes, this is a very common question. There's like, I can't go into all the details, but there's very, very good articles written about this, basically debunking this kind of, it's a very kind of simple view of looking at it. There's a number of reasons why this is false. So first is 70% of the energy that's being used for Bitcoin mining is actually renewable energy. A lot of it is happening in China at hydro dams of energy that's otherwise would not be used at all when there's a surplus of energy. Bitcoin seeks out the cheapest electricity forms. In some ways, it actually promotes innovation in energy use. So in the US, where you have these oil fields where they flame this methane, whatever it's called, gas. Usually they just flame that gas, and that's very, very bad for the environment. What's happening now is these oil rigs have discovered, what if we take this energy and run Bitcoin miners on it, and at the same time they capture all of the gas that goes into the environment. So there it's actually helping the environment. Plus, there's the argument, of course, how much energy are we going to save by having a global neutral settlement layer for value, right? How much money are we spending? How much energy are we wasting on running banks, on running legacy mainframes, on legacy infrastructure, on printing cash? So much energy is going that. It's a multitude of what's being used on the Bitcoin blockchain. So it's a FUD, it's a pure uncertainty and doubt. It's people who claim that in articles. It's a natural question for people to have, but people who claim that in articles or in serious publications, they have an alternative motive. It's been thoroughly debunked, and there's a lot of articles online, particularly Nick Carter. I think he has written a piece on that. I think it's called the final word on Bitcoin's energy consumption. If you Google that, you'll find all the detailed reasons why. It's a bit of a red herring, basically. Yeah.
All right, with that, I echo Craig's comment here. Great presentation, very clear, persuasive, much appreciated. Thank you, Kenrick, for your time. Great insights into the future of Bitcoin and DeFi. And I'd like to thank the audience as well today. Hope you have valuable takeaways from today's webinar. So I know that you would want to know whether slides will be shared. Yes, and to that question, on any information source for Bitcoin and DeFi platform. So do reach out to Kenrick. You're available on LinkedIn, or I can connect both parties together. So
yeah, feel free to email me, kenrick@lunex.vc, or on Twitter, I'm @kenricklunex. If you want to learn more, I have a list of like videos that I can send you, and if you have any specific questions, always happy to answer those. So just feel free to reach out.
Great. So I will be sharing the slides. Kenrick's contacts will also be available on the slides as well. So audience, please provide your feedback and survey once you exit from this webinar. And I'll see you on the next webinar on 18th of February with Emily Ting, the founder of Blessings in a Bag. She'll be sharing on her journey and also founding the social enterprise. It is now an award-winning social enterprise to date. So I look forward to see you then. And recording will be available. So see you soon. Thank you, Kenrick. Thanks, audience. Have a good day today. Bye. Take care.